And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Yes, I made it into the office today despite the good old shoulder surgery. Yes, looks a bit swollen, but that's just padding. And let's jump right into it because I know you guys don't care about that. First things first is we spoke about this yesterday. And that is the 4-hour time frame on CMEs where the professionals trade. That is the Chicago Mercantile Exchange. The symbol is BTC1 exclamation in case you were wondering. And what do we have here? The 4-hour putting in a bit of a double top and closing below the critical region we spoke about yesterday, which was 19,680. Call it 19,690. Right in this zone right here. We were saying, hey, if Bitcoin does want to break back below this level, very likely we're going to revisit the bottom side of the range. Probably a stop here at 19.1 and then, probably continuation down there. If we broke it to the upside, which is 20,500, the next stop was 21,535. And this is going to be the harbinger of death and despair or peace and prosperity. If we can get a bounce or just hold this region at 18,085 bucks, like Raoul Paul and the guys at, all those smart guys that have staked their entire careers on cryptocurrency. We're talking Raoul Paul, the guys at, and I really like these guys because they're bringing awareness to cryptocurrency, but they are beginning to remind me a lot of the talking heads on Bloomberg when it comes to crypto. The other big one is the GBTC guys. I think it's called the Galaxy Fund. Needless to say, I saw them on YouTube this morning saying that the low is in on Bitcoin and it is in for good. And just unfortunately, I don't have the same bias given all the economic factors. In the same breath, they were talking about how the economy's in shambles and how the stock market's going to crash. Well, if Bitcoin's just a higher beta tech stock, which it is, and we are not seeing any decoupling yet, until the trend changes, let the trend be your friend till the end of the trend, right? That is the great old saying from a trader's perspective. And look at these higher lows on the 4-hour time frame. So is the trend going to hold here? Are we going to get a little bounce off of this region? Let's see if it lines up with any of the fib tools here. And just going from the wick high to the low here. We're coming in right at the 618. So if this does close in the next 45 minutes below here, I would say, yes, very likely we are going to come test the bottom side of the range, coming in at about 18.7. And this is a critical pivot point. It is the last day of the week for the dollar and for CMEs. So we'll have a weekly closure coming up here. And the way we are getting these wicks off the 9 exponential, this is not a confirmed higher low here. A lot can happen in the next 3 hours and 45 minutes. But with the news that came out today, what was the news? Non-farm payrolls came in higher than expected. You would think more jobs in non-farms would be a good thing for the economy. But in fact, it is showing that whatever the Fed is doing is absolutely not working. Okay. Yesterday, the big news, I think, was job openings was 10 million versus 11 million. So, job openings came in less than expected, which they thought was a good thing. The market had a temporary bounce, but then everybody realized jobless claims was 200,000 the day before that. So do a little basic math there. 10 million job openings versus 10 million who just quit or left their job or was too silent to work or whatever you want to call it. They were too woke to be awake, right? And they lost their job. Not to say all people are like that, but 10 million divided by 200,000, that means for every single person that doesn't have a job, there are 50 job openings. That's good news. That is good news for people who just lost their job. Bad news for the economy because Powell said, look, we're not going to we're not going to stop raising rates until job openings and job quits rebalance. And I am sure in a lot more pain than I thought I was going to be. They blocked my nerve yesterday, so my arm went completely numb, and I couldn't feel it for most of the day yesterday, but woke up this morning, and boy, it's not fun, and I don't think the pain medication is doing a thing. I'm going to have to put a little complaint in on that. I got Tylenols, Advils. Anyways, hopefully I won't be all over the place today. But what did I want to get out here on the weekly time frame? We will cross back down below 18,839. So does that possibility happen? Can we see a 500, what is that? Call it a $500 move. 8,840. Yeah, that's a $500 move to the downside by the end of the day. I think we've seen bigger moves than that. And with what we have right here, Stokes are down. Volatility is increasing. Again, getting above the 20 percentile. That's when you know the move is in full force. We're getting expansion. And something else I'll note from yesterday's price action. Sorry. So let me wrap it up on the weekly time frame. Okay. If we do get the weekly Stokes to cross back down and volatility to get above the 20 percentile today, that would give me the general bias for that downside move. We were saying based on the daily time frame yesterday, and I'll put it out there. I said very, very likely what could happen. We were getting expansion on the daily. That volatility could begin to expand, then come down, and then you get the real move. And that's when we're above 20 percentile. If this stuff gets vertical right here, the BWP, which is represented by the blue line, and the moving average represented by the white line, if those both get a positive slope and we get above 20 percentile on the daily time frame, the average move produced from this signal is 24%. And what else did I want to mention? And the average move and the Stokes will cross down today below 18,759. If the daily Stokes cross down on CMEs today, very, very likely the stochastics have gotten the correct direction of that move 88% of the time. So again, TA is not an exact science. It is more of an art form. And, these signals are not guarantees. They're just probabilities. And right now, I would say probabilities lay in favor to the downside, even if we don't see a complete signal fire off today. But here's, the first warning signal. We talked about it yesterday, a closure below here. The second warning signal would be if we have a 4-hour closure below 18,000, call it 18,900, or more specifically, the 19,900. More specifically, I would say a 4-hour. Yeah, if we just, see, this is a slight uptrend. We got the higher highs, higher lows. Now we got our first lower low. I would be looking for a lower high to be put in place first. And that is the thing is, I've made the mistake many times before in front running the decision to, start going short just as we break the range. But what does price action typically like to do? It likes to break and hit the 1618, bounce up, test the 100, or you could even test the 618 or the 0.5. get a bounce as high as there, and that would probably give you your additional drive of bearish divergence. Are we going to get any hidden bullish divergence? That'll be one drive right there. So again, we haven't confirmed this as a local low. It is currently just getting back into the bearish control zone after rejecting the shoulder hurting. All right. Get a little sip of water here. We're 10 minutes into the video. And so if I was looking at this market and I wanted to take a trade, well, this would have been the first trade. Unfortunately, I was in surgery yesterday, so I can't say I missed that one. I'm waiting for the big trade. The big trade is going to be below 18,100. I do believe that that is the lowest daily wick on CME. So any kind of a 4-hour closure below 18,761, very, very likely going to get the rest of this move. And a daily closure below there on CME is also going to get that move. So some people will front run it on the 4-hour, and some people more conservative will be waiting for the daily closure below that level. Again, the higher term the time frame, the stronger the signal. And what we can see is from, using a bearish retracement from the high to the low here, we came up to the 0.5 for 1, 2, 3, 4 times now on the daily and got rejected. So what do we expect is, this is going to confirm today as a lower high and still kind of a rough consolidation. So, yep, daily time frame, if that does cross down today. And so what is going to be, our first indicator that that's happening? And again, Fed says they're not going to stop raising interest rates until what? Until job quits and job openings rebalance, and inflation's got to come down, obviously, as well. So what did I want to bring up to you today? Okay, as you can see, the 2-year, we've been talking about this. It's at 4.29%. Real estate market is going to get crushed, guys. It's just got to bring down inflation. Why is that? Well, look, since this is the 2-year U.S. Treasury bond, since January this year, we've gone from 0.75 to 4.28. Do the math. I don't know how big of an increase that is, 200-300%, but that's astronomical. Okay, the 10-year has gone from, where's January? 1.5 to 3.8, and the 30-year has gone from, call it 2% to 3.8%. And look at the chart on these guys. As soon as we take out 4% on the 30-year, the next level is going to be up at 4.69 or 4.75. And with another 75 basis point rate hike coming next month, I believe it's November 2nd or November 3rd, somewhere in there. That's the next FOMC meeting, very, very likely. We're going to see that push to the upside. I'm sure this thing can go all the way up to 5% if we're looking at it on a weekly time frame. You just take a quick fib retracement from the low to the high. And look at how we're hitting that 1618 fib. The next stop, 4.5. A volatile move takes you up to that 3618 and the 4236. And that is coming in line with highs going back to 2004. So bottom line is interest rates are at the highest level we've seen since 2014. Mortgages are more expensive now, the most expensive now that they've been since 2014. So real estate, yes, probably taking a hit, and that's alongside everything else you want. It's all going to be cheaper next year. And what else do I want to point out? So the weekly will not close on spot price until till Sunday, 5 p.m. Pacific time. I don't know if they just did a time change, but it's 4 or 5 p.m. on Sunday. CMEs will close today and will cross back down below 18,839. So do we get one more push to the downside? And here's what I would be looking for on the dollar here. That is the harbinger. The chart to rule them all is the dollar. And we said over the last week, based on our 5-day time frame, any tick below there, we're going to get a move to the 9. And if we confirm the second drive of bearish divergence, prices making higher highs, RSIs making lower highs, that'll give you a shot to the 21. I define this as 2 drives of bearish divergence. So you have from this high to this high, there's 1, there's 2, and that gives you a target down to the 21. And 3 drives gives you a target down to the green 55. So at some point, yeah, the dollar's going to cool off. But if we close the week like this, usually, I mean, this is going to be the third closure below. So let's bring it back down to the lower term time frames. And what do we see here? What do we see here? So there was a bit of a gap there providing, well, we shot through it, and those are going to be areas of, resistance. This looks like a perfect head and shoulders to me, and kind of any kind of a 4-hour closure, I would say above this last wick at 112.80, very likely gives you a shot to the top side of the range. What else do we have? What else do we have? Do we have any hidden bullish divergence? On the 4-hour time frame, that is one slight concern. Yeah, we do have it there. I don't know if my brain's working on full capacity here, guys. Yeah, so you're going to have multiple drives of hidden bullish divergence where we're making higher lows. It's easier to see like this. Okay, so if I mark them all off here, that's a higher low. That's a higher low. Technically, that's a higher low, but it's not a lower low in price, right? Than RSI. Higher low, higher low, higher low. And this is perhaps another higher low. So what do we see coming back from this pivot right here? We got 1, 2, 3, 4 drives of hidden bullish divergence. And where does that give us a target? Well, based on the 4 drive philosophy, first target is the 1618. The second target is the 2618. So I do believe the dollar is going to reach back up to 113. If it doesn't happen today, we might get a pullback first, but as long as we are maintaining these higher lows and higher highs on the 4-hour time frame, I would look for this target to get hit at 113.67. All right, so if the dollar continues onwards and upwards, yes, I believe Bitcoin will head back to the bottom side of the range, and that is the guy that rules the whole market. What else do I want to bring up? All right, so that's it for Bitcoin. I'm going to hop into some of the other coins right now. Ethereum. Again, just a massive consolidation. Taking off the moving averages. The first thing I'm looking at right here is these multiple drives of bearish divergence on the 4-hour time frame. Let's see if we got it on the daily time frame. Wow. Shoulder feels amazing. And we've been calling for a move down to about $1,000 for some time. And here's what I would say though, is the fake out moves happen right before the breakdown moves. The fake outs right before the big breakdowns. And so this descending triangle, lower highs, lower lows, did break to the upside. However, there was no volume or velocity behind it. And alongside Bitcoin coming down, yeah, typically this is what, you'd want to buy, is the retest of this triangle right there, coming in probably at the 618 fib on a bearish retracement. Yep, right there at the 618 at $1,300. That's what needs to hold for Ethereum. If we get any kind of a daily closure back below $1,300, I'm looking for us to revisit the bottom side of the range here. Call it at 1,260 or 250. If we break below 1,300 on a daily time frame, momentum will cross to the downside. If we do get expansion above the 20 percentile on Ethereum, I am going to look for the next leg down to about $1,000. Call it 1,050. And it would be this fib right here at $1,056. So $1,300, that's kind of the line in the sand for Mr. Ethereum. XRP holding it up very well, valiantly. And this is what I love about just kind of looking at these charts without all the moving averages on. I do want to take a look at the VPR. So we are getting above this node here, and that does give me a bit of concern. But this thing has been very whippy price action. So a bit of a descending triangle, if you can kind of see it here. Again, you want to get the breakdown and then the retest of the trend line. You don't want to buy the higher high. You want to buy the higher low. So, yeah, measure move could be back up to the top side of $55. But here is the thing that's had me bearish on this guy is not the VPR, but the looming death cross. And I actually have one more short in right here at 52 cents. And, with a stop loss right above the purple 200. So, as long as Ethereum is in this range, excuse me, as long as XRP is in this range, I'd expect more consolidation and actually favoring a downside move. Any kind of a daily closure back below 41 cents is going to have massive implications for XRP. So let's see on the daily what that looks like. Yep. So from the bottom to the top. And here's what I would say. Again, using our fibs, right? If we just use the daily time frame, the daily, if we get a closure above 55 cents, we're coming up to 64. And then we'll still have bearish divergence in play. If we have a daily closure below 41.68, that will imply targets all the way down to about 32 cents. Currently, momentum is crossed to the upside above 47. And what else? Currently, momentum is to the upside for Mr. XRP. What else do we want to look at? Or how can I wrap up my thoughts? Yeah, so I'm waiting for the daily closure above or below there. And just throwing in one more short on this puppy, as if Bitcoin gets hammered, I believe XRP will as well. And this was just a test of the, the range breakdown off of this massive descending triangle. Look at this thing. So what is the measure move off of this triangle? So again, descending triangle, you take it from the 50 percentile, just making this a little bit shorter. So it'd be somewhere around here. And we'd expect a full move down to about 24 cents. So good risk to reward opportunity here, I believe. You could put a short in as high as 55 cents with your stop loss right above the purple 200. Some people like to, front run it. You see these wicks right here? That's the pros pushing the price down, right? Where everybody else is reading the news about XRP doing something, whatever it is. The pros are saying, no, no, no. This is just a cup consolidation after a breakdown, and the next target based off of this breakdown is going to be all the way down there at 24 cents. And very similarly, Bitcoin, the same chart, right? Where is that target off of this guy from the high to the low? Call it 10,200 or 9,800. That is the 1618 fib. That is ultimately where I think we're going to end up here, even if we get a pump into this death cross, which we haven't had a death cross on the 5-day, I think only one other time in Bitcoin's history. And let's just see, where was that death cross going back? Yeah, that was the only death cross back there. And we've also never had Bitcoin. So price action gets sucked up into the cross and spit back out. And that's exactly what you want to see. And yeah, sometimes it can get above the cross, which can fake you out, get you stopped out. But you can see that resulted for Bitcoin in only a 30% drop. So not too bad. And if Bitcoin did kind of make a higher high on the weekly and then a higher low, well, that would look bullish for trend reversal. So what else I want to remind myself on the monthly time frame and the accumulation distribution. We have never seen Bitcoin put in a macro low without the accumulation distribution. And look, this is turning white here on the MACD, so that might be a warning sign of a bit of a bounce. But this will turn back red if we have 24 more days left in the month. But this needs to gain a positive slope for us to identify a macro low being put in. As you can see, as this thing got positive right here, we did get a bit of an upswing from 3,200 to 12,000. And if we throw on log scale, take off those Bollinger Bands, we did get a positive slope right here on the accumulation distribution chart. And just look, simple indicators, guys, that, some retailers out there think it's so hard to guess, when a macro low is in and when the tide is turning and when's the time to get bullish again. Well, we have indicators that tell us exactly when. And until these things happen, like a trend reversal on the weekly time frame or the monthly accumulation distribution, the monthly accumulation distribution indicator gets a positive slope, we will not be looking for the macro low to be put in. So combining that with the stock market going down again, look at the stock market on the 3-month. This is the first time we've seen the MACD turn red since, oh, what happened here? That was a 50% drawdown in 2008. What happened here? The MACD turned red on the quarterly. Again, powerful, powerful time frame. Not only that, the quarterly is crossing down on the MACD. And very similarly back here on Bitcoin, when the MACD crossed down on the monthly, I was telling clients right here, might be time. It might be time just to let go of some positions. And thank God we did in most cases. So something to bear in mind, if the S&P on the quarterly, which is an even more powerful time. Let's see what the 6-month. Oh, look, the 6-month hasn't even turned red yet. Did it turn red in 08? Yes, it did. Did it turn red in 02? Yes, it did. Did we get the cross down on the MACD? Yes, it did. But we're already getting it on the 3-month. We got it on the 2-month. We got it on the monthly. Let the trend be your friend till the end of the trend. So any kind of a macro reversal talk, guess what? It ain't here. And then on the other side, those interest rates, when interest rates go up, bad for stocks. Oh, look at that. We got a cross up on interest rates November 2020. So, needless to say, rising interest rate environment, Bitcoin and the stock market has never put in a low in a rising interest rate environment. That's it for today, guys. 30 minutes in. Hope you guys liked it. Hope you subscribe to the channel if you're new. If you have any questions, you can always drop a question in the comments below. We have a free tutorial on TradingView, so you can start to set up some of these indicators. There's a link in the description there. You can check out our, you can check out our website. You can check out the iPhone app. You can check us out on Instagram and Twitter and on TikTok. And no, I'm not the social media guy. I don't even post that stuff. I just give the videos to my guys and they do it for me. And thank God, because I don't have the patience for it. But apparently, there's a lot of people on there and it's part of the marketing world. Anyways, all right. I will let you go with that and wish you guys all a blessed and highly favored weekend. And we will be back with some more price action on Monday. Some more news. Remember, next week on the 12th and the 13th, big days coming up. The 12th and the 13th, you've got PPI and CPI. So you'd guess what that means for the markets if those numbers are, if inflation is worse than expected, if PPI is worse than expected, it will not bode well for the markets. All right, take care. Bye-bye.